Netflix is gearing up for its results tomorrow. I'm not going to say earnings because we don't know if they're going to earn anything. Stock is up more than 35% this year. The streaming wars certainly are heating up. Let's bring in Tom Rogers, executive chairman of WinView. He's also the former CEO of TiVo and former NBC executive and a guy very closely associated with this fine network. Tom, thank you.
Thanks for having me.
Good to see you as well. So do you think there'll be earnings in Netflix earnings report?
Yeah.
Will they ever make real money?
Well, they have GAAP earnings. What they don't have yet is free cash flow, and they have a pretty deep hole on the cash flow side. Projections are $3.5 billion of cash losses this year. I don't think that really goes to the essence of the story, though. What we're not going to know this quarter is anything about Friends or Frenzy. We're not going to know what it means to lose any of the content because that hasn't taken effect yet, won't for a while.
Yep.
And the frenzy, meaning HBO Max, Apple Plus, Disney Plus, we're not going to know the effect of any of that stuff yet because it hasn't launched. What we are going to know is the pricing power that Netflix has, because over the quarter, they took some major price increases, both domestically and abroad.
Yep.
15 to 18% domestically, the standard and the premium package up $2. Similar types of price increases in Western Europe. You got Western European countries where Netflix on euro basis is actually more expensive than the U.S. And we're going to see whether or not there is churn there, whether they really had disruption or they're really able to hold the base with those price increases. Now, expectations are very low for U.S. domestic subs, less than 500,000. My guess is they're going to beat on that because they projected very low guidance on the U.S.
A little sandbag, maybe, perhaps, by
well,
Netflix?
you know. Big
We've
prices.
seen stranger things than that.
A good one, very good.
What did I say?
I got no credit for Friends and Frenzy, but you say stranger things.
I didn't want to interrupt because Friends is moving off to AT&T's Warner Media.
Yeah.
Here's the thing. Okay, so you helped build CNBC. This is the wealthiest audience in television, so maybe our audience is not the right one to talk about this with. But how many streaming if I go to Apple TV, which I use at home, okay, how many streaming platforms do you believe the middle class family, the bread and butter of this country, is realistically going to afford or can afford?
Well, it's a great question because as people cut the cord, and I actually think this quarter we're going to see some record cord cutting, and that's going to raise the issue of, okay, as people cut the cord, how many streaming services they're going to take on, your question. My view is Netflix is going to be the overwhelming base streaming service in everybody's home. There's going to be a fight between everybody else as to what the second, third, fourth streaming service is going to be. But Netflix is spending so much more money than anybody else. When you look at HBO, talking about HBO Max having a couple extra bucks, going to $17, even assume half of HBO's 38 million subs take that $2, that's $300, $400 million of incremental revenue a year. Netflix is going from $15 billion to $20 billion of programming cost over a year. Nobody else is going to touch that. That is going to be the mainstay as a result of the original programming, because it's original programming that drives new subs and, quite frankly, holds subs.
All right, so let me ask you. So you're saying Netflix says that they're way out ahead, nobody's close. But of the Disneys, the AT&T and whatever else is out there in over-the-top space, who has a chance of surviving? Not all of them can.
Well,
where's Apple?
I think there's going to be room for multiple players. I think when you think about what is a little detached from reality, Disney's gotten $50 billion of incremental market cap since it's made its streaming announcement in April. Okay, it's got a few million subs on ESPN Plus, hasn't launched Disney Plus. Hulu now is going to be able to go international, but hasn't announced any numbers on it whatsoever. And they got to buy back Comcast, a third of it, at a full market price in 5 years. There's a lot of risk there, and they're getting $15 billion, about 1/3 of Netflix market cap. Does that mean Disney is going to make it? Yeah, I think they probably will, but I don't think that it is going to necessarily mean that we have this massively transformed company going on a clear upward trajectory that looks like...
I know we're tight on time, Tom, but I can't let you... and with the exception of betting in Europe, WinView, what is the most exciting company that you see right now?
The most exciting company I see right now in the space, it's got to be Netflix.
Really? Still?
Streaming.
There's no young buck coming up. You're like, that's a company to watch.
Netflix is in Bangladesh. It's in Nigeria. It's in Ethiopia. I'd like to see the HBO Max plan for entry into Ethiopia. And they're U.S. denominated dollars that are being paid there. The hit against Netflix is, its subs internationally aren't worth very much. Their average subs, they're nearing 100 million subs there. Their average subs are $9 to $10. They just took a 25% price increase in Japan, 19% in Canada. There is a lot of room on this thing still, and I think if I had to pick something that's really exciting, it's that one.
And Tom, I remember people on this network years ago saying DVDs by mail will never work. Nobody wants that. We've got Blockbuster Video.
Or at 20 million subs, they were going to have to cut price to get any more growth. Look at that.
And they've done well. Tom Rogers, WinView, thank you very much, Tom. Awesome. It's a real pleasure to get your views. Netflix.
Love it.
Most exciting company out there still right now, and you love it.
I do, because with Tom,
it's not cash flow positive,
but
maybe never will be.
Well, I mean, if they never will be, we have a problem. But I mean, there's been plenty of companies that burn through cash like that. It's all about that original content, and that's what they have to do right now. And let's keep.
Amazon did it for 20 years, didn't it?
Yeah.
Just burn through cash.
I own Netflix, and I bought it a little over a year ago. I pitched this one as well. Everybody voted against me. Why did they vote against me? Because they didn't see the vision that he sees right now in terms of the international growth, pricing power, and they've got both those on their side.
I changed my vote then.
There you go. You went yes.
I'm with you.
No,
I changed it.
I appreciate that.
Now many people see that view. That's why he founded CNBC, and he built NBC
right.
Executive.
He's got vision.
And
He's a visionary.
or whatever. All right.